Yes, a very good morning to all of you. Right, so I hope you've had a look at the discussions regarding the amendments in the May 23 RTP. Right, mainly there is a amendment over there regarding the classification or the categorization of the NBFCs, wherein you have the base layer, the middle layer, the upper layer, and the topmost level layer over there. And apart from that, there is a change in the peer review process and the scope of peer review. The what is the eligibility to be a reviewer, right? Some little changes over there, and also the peer review process, right? Also in ethics, there is a change in the applicability of the NOCLAR, that it is applicable to employees of listed entities, but only the senior professional accountants. Then it is applicable to the auditors of the listed entities, but only those listed entities who are having net worth of 250 crore or more, right? So then whatever changes are there in SEBI, LODR, Audit Committee, Corporate Governance, those were already there for the November 22 exams, and same continue to be there for the May 23 exams also, right? Then also a change in the definition of the small company, wherein it says paid up share capital 4 crore and turnover 40 crore. Instead of 2 crore and 20 crore, they've now made it 4 crore and 40 crore over there. Okay, right? So now let's get into the discussion regarding the MCQs which are there in the RTP May 23. Yes, integrated case scenario 1. Good Deposit Limited, a NBFC registered with RBI under section 45IA of the RBI Act and listed on the National Stock Exchange, appointed ABC and Company Chartered Accountants as their statutory auditors for 2023. J, the audit partner of ABC and Company, extracted the monthly net owned fund position for the books of Good Deposits Limited. ABC and Company was peer reviewed last in January 2019, and its peer review certificate was valid until January 2022. ABC and Company did not apply for peer review after January 22 till the date of the acceptance of the audit. Month net owned funds as calculated based on the monthly position April to March, and 350, 350, 320, 310, 290, 250, 240, 190, 180. Like if you might be remembering, what are the minimum net owned funds for an NBFC? 2 crore, that is 200 lakhs. What are the minimum net owned funds for an NBFC? 2 crores, that is 200 lakhs. And here in the month of November and December, it is less than 200 lakh. Okay. Then 240 lakh, 270 lakh, and 310 lakh. Okay. The board of Good Deposit Limited consisted of 9 directors, of which 5 were non-executive, including a woman director, and 2 were independent directors. So out of 9, only 2 are independent directors. Out of the above, the chairperson of the board was a regular non-executive director and a promoter of the company. The company was not out of the top of 1,000 top listed entities for the past 5 years. During the year, Mr. J recommended to the board and to the audit committee to have internal auditors. However, board, citing budget issues, rejected the audit partner's recommendation. Board, however, assured that they would consider next year to have an internal audit department within the company. On the basis of the above mentioned facts, you are required to choose the most appropriate answer for the following MCQs. Okay, right? So what all have they integrated in this particular case study over here? One, they have integrated regarding the NBFC, right? Then after that, there is a discussion over there regarding the peer review, right? Discussion regarding the peer review. Then after that, they come to the SEBI LODR, the audit committee and the corporate governance, and then talking about section 138, which is regarding the internal audit. Okay, right. So let's look at the first question over there. Mr. J reported under clause 3A3 of Master Directions NBFC Company Audit Report Reserve Bank Direction 2016 that Good Deposit Limited is not eligible to hold its certificate of registration under section 45IA of the RBI Act, as during the year the net owned funds went below the minimum required limit. Management of the NBFC had a different opinion that a certificate pertaining to the net owned funds from the statutory auditor is required with reference to the position of the company as at with reference to the position of the company as at the end of the financial year ended 31st March, and not based on each month's position. Kindly guide Mr. J with respect to the requirement under the master direction. As you might be knowing, for an NBFC to be registered with the RBI, one, it needs to fulfill the principal business activity criteria, that is the 50-50 test. At least 50% of the income should be income from financial assets, and at least 50% of the total assets should be the financial financial asset, and in addition to that, it should have the minimum net owned funds of the 2 crore. Now, the question is whether these minimum net owned funds are required to be maintained throughout the year, or whether they are required to be maintained at the end of the financial year, right? So obviously, the net owned funds, it's a balance sheet item type, so it has to be maintained at the end of the financial year and not throughout the year. So every NBFC shall submit a certificate from its statutory auditor that it is eligible to hold a certificate of registration under section 45IA of the RBI Act. Such a certificate shall be with reference to the position of the company as of the end of the financial year ended 31st March, as at the end of the financial year. Every NBFC shall submit a certificate from its statutory auditor that it is eligible to hold a certificate of registration under 45IA. Such a certificate should be with reference to the position of the company as at the end of each month. Every NBFC shall submit a certificate from its statutory auditor that it is eligible to hold a certificate of registration under section 45IA of the RBI Act. Such a certificate should be with reference to the position of the company throughout the financial year. Only NBFC MFI, that is microfinance institution, shall submit a certificate from its statutory auditor that it is eligible to hold a certificate of registration under 45IA. Such a certificate should be with reference to the position of the company throughout the financial year, right? So nothing like that. It is only for the microfinance institution, then also not throughout the financial year, not at the end of each month. So what is the correct option over here? A is the correct option, as at the end of the financial year ended 31st March. Okay. Right, coming to question number 2. J was of the opinion that the composition of the company's board of directors is not in compliance with the SEBI LODR regulations 2015. Kindly guide the management with respect to the provision which is not complied by the management specified in regulation 17 of SEBI LODR regulations. Okay, right. So what does it say? It consisted of 9 directors, out of whom 5 were the non-executive directors, including 1 woman director, because every listed entity at least 1 woman director, and 2 were the independent. Okay, out of the above, the chairperson of the board was a regular non-executive director and a promoter of the company. So chairperson of the board, is he regular? Yes. Is he non-executive? Yes. But is he promoter or related to the promoters? Yes. In that case, at least 1/2 should be the independent directors. At least 1/2 needs to be the independent directors. Had it been regular non-executive, not a promoter or not related to the promoter, then we would have said 1/3 independent directors. But here, because it is related to the promoter, non-executive director and a promoter of the company, at least 1/2 independent directors, right? And it was not out of the top 1000 top listed entities, because top 1000 listed entities need to have an independent woman director. All listed entities need to have a woman director, and top 1000 listed entities need to have an independent woman director. However, it says it was not out of the top 1000 listed entities for the past 5 years. Okay, right. So now coming to the options over there, where the regular non-executive chairperson is a promoter of the listed entity or is related to the promoter or person occupying management positions at the level of board of director or at one level below the board of directors, at least half of the board of directors shall comprise of the independent directors. Where the chairperson of the board is a non-executive director, at least 1/3 of the board shall comprise of independent director, and if the listed entity does not have a non-executive chairperson, at least half of the board shall comprise of the independent directors. No, there is no such classification over there, non-executive director and so. The board of directors shall have an optimum combination of executive and non-executive directors with at least 1 woman director, and not less than 50% of the board shall comprise of the non-executive directors. But here they are talking about the regulation 17, wherein we need to mention about the composition of the independent directors. Okay, and where the chairperson of the board of directors is a non-executive director, at least 1/4 of the board of directors shall comprise of the independent directors, and where the listed entity does not have a regular non-executive chairperson, at least 1/3 of the board shall comprise of independent directors, right? So what did I tell you? 1/3 is not the correct option in this case. 1/2 is the correct option in this case, right? So 1/3, no, this is not talking about independent directors. That is why option C, no, and it is not 1/4 or 1/3, right? So what is the correct option over here? A is the correct option. Where the regular non-executive chairperson is a promoter or is related to the promoter, then what does it say? At least half of the board of directors of the listed entity shall comprise of the independent directors. Okay, coming to third one. At the time of accepting the audit of Good Deposit Limited, the quality engagement partner objected that ABC and company does not hold a peer review certificate and hence cannot accept the statutory audit of NBFC. J was of the opinion that ABC and company were falling under the level 2 category and hence they are required to get themselves reviewed once in 4 years. Kindly guide Mr. J with respect to the peer review requirement as per the peer review guidelines 2022. Right, so somehow this question is a bit redundant over there, because now earlier the class applicability of peer review was level 1 units and level 2 units over there, but now they have changed it to mandatory and voluntary. Right, if you look into the RTP May 23, what is the applicability of peer review now? It says mandatory, where peer review is required to be conducted of the practice unit, and where voluntarily you may get a peer review done, and then the special case review where it is required by the auditee or on the request sent by the practice unit. Right, so that is another special case review. Right, so now over here, what does it say? It's a level 1 unit. And what is justification are they giving? Not level 1. They are saying they fall under the level 2 category. So peer review needs to be conducted once in every 4 years. However, level 1, level 2 NBFC, that is not relevant over here. What is very relevant in this question is regarding the listed entity. What does it say? It is a listed entity, right? Listed on the National Stock Exchange. And listed entity, if you want to do the audit of a listed entity, you should be holding a valid peer review certificate. Otherwise, you are also guilty of professional misconduct under clause 9 of part 1 of the second schedule. Right, clause 9 of part 1 of the second schedule. You accept the audit of a listed entity. You don't hold a valid peer review certificate, right? Where are you guilty of professional misconduct? You're guilty of professional misconduct under clause 9 part 1 of the second schedule. So what does that mean? If I want to do the audit of a listed entity, I should be holding a valid peer review certificate. Okay, right? So clause 9. What is clause 9 part 1 second schedule? Fails to invite attention to material departure from the generally accepted audit procedures applicable to these circumstances. Okay. Now, every practice unit falling under the category of level 2 is required to get peer reviewed once in every 4 years. ABC and company was last reviewed in Jan 19. They need to get themselves reviewed in Jan 23. Out. As per the peer review mandate, practice units which propose to undertake statutory audit of enterprises whose equity or debt securities are listed in India or abroad as defined under the SEBI regulations, for these practice units, there is a prerequisite starting from 1st April to have a peer review certificate before undertaking the stat audit assignment, right? So it is mandatory. Okay, every practice unit under the category of level 2 is required to get peer reviewed once in every 3 years. ABC and company was last reviewed in Jan 19, next review in Jan 22. No, right? Practice units are required to wait for the allotment of peer reviewer by the board. Once the name of the peer reviewers are intimated by the practice unit, then the practice unit can initiate the process of peer review with the reviewer. No intimation or nothing like that. Mandatory to get a peer review done if you want to do a audit of a listed entity. Okay, next one. J wants to highlight the matter with respect to the absence of internal audit function in his audit report under the emphasis of matter paragraph. However, management was of the view that the audit partner was not right by disclosing the said matter in his audit report, as it was an internal matter and the audit team had not identified any material evidence which could impact the opinion of the auditor. Kindly guide Mr. J where the proposed reporting under emphasis of matter paragraph in the audit report is correct. Okay, right. So basically it is a question regarding 706, emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. Any matter which is fundamental to the user's understanding, emphasis of matter paragraph. Any matter which is relevant to the user's understanding, other matter paragraph. If the matter is related to the financial statements, then emphasis of matter paragraph. If the matter is related to the audit or the auditor's understanding or related to the audit procedures, then it comes under the other matter paragraph. Here what do they say? They want to put it under the emphasis of matter paragraph. Is it correct or not? Okay, so emphasis of matter paragraph included in the audit report refers to a matter appropriately presented or disclosed in the financial statements, means it's already there in the financial statements, that in the auditor's judgment is of such importance that it is fundamental to the user's understanding of the financial statements. Hence, reporting under EOM is correct. Emphasis of matter paragraph is correct. Now, yes, what does it say? Absence of internal audit function. Is it included in the financial statements? Is the matter appropriately presented or disclosed in the financial statements? Right? Is the matter appropriately presented or disclosed in the financial statements? No. Then next one, emphasis of matter paragraph included in the audit report refers to a matter other than those presented or disclosed in the financial statement that in the auditor's judgment is relevant to the user's understanding of the audit, the auditor's responsibility or the audit report. Hence, reporting under EOM is incorrect, right? So this is not EOM. They are talking about the OM. They are talking about the other matter paragraph, which is relevant to the user's understanding and not presented in the financial statements. Then, emphasis of matter paragraph included in the audit report refers to a matter appropriately presented or disclosed in the financial statement that in the auditor's judgment is of importance, such importance that it is fundamental to the user's understanding of financial statements. Hence, reporting under EOM is incorrect. Okay. Because it's not a matter which is appropriately disclosed in the financial statements, the absence of internal audit function. An emphasis of matter paragraph included in audit report refers to a matter other than those reported under the presented disclosed in the financial statements, which in the auditor's judgment is relevant to the user's understanding, auditor's responsibility or the auditor's report. Hence, reporting under EOM is incorrect, right? So B and D, they are talking about the other matter. They are talking about the other matter. And then what is the difference over here? Reporting under EOM is correct, reporting under EOM is incorrect, right? So reporting under EOM is incorrect, right? So which is the correct option over here? C is the correct option, right? C is the correct option. Right. Kindly guide Mr. J regarding areas where he may need to report the absence of internal audit function in the company in the audit report. The auditor is required to report the matter in the basis of qualification paragraph of his audit report, as the auditor was unable to place reliance on the internal audit function of the company. The auditor is required to report the same under para 3 clause 13 of CARO 2020. The auditor is required to report the same under para 3 clause 14 of CARO 2020. The auditor is required to report the said matter in the key audit matters as per SA 701, which requires significant professional judgment and the user attention. Right. So clause 13 is regarding the related parties and clause 14 is regarding the internal audit function, whether the company has an internal audit function which is commensurate with the size and nature of its business, and whether the reports of the internal auditor for the period under audit have they been considered by the statutory auditors, right? So the reporting will come under clause 14 of CARO. Right. So that completes our discussion on the integrated case study. Now coming to the independent MCQs. Mr. D is a practicing chartered accountant from Mangalore. He has been practicing as a sole proprietor for past 2 decades. Mr. D's daughter, Miss S, is a newly qualified chartered accountant who cleared the final exam just 3 months ago. Immediately after qualifying, she also wanted to set up a sole proprietary concern and practice on her own. After setting up the firm, she printed her own visiting card as follows: S and Company, Chartered Accountants, Proprietorship, Miss A.S., FCA, BCom, Office, JJ Nagar, Mangalore, and the phone number given over there. Okay, now FCA. And when you become a fellow, but the moment your name is entered into the register of member, you become an associate chartered accountant. An associate chartered accountant in continuous practice for 5 years, or his practice is experience is considered to be equivalent to be that of in practice in 5 years, shall be registered with the institute as a fellow chartered accountant. Here she has just cleared her CA final exam 3 months ago, right? So can she be? Can she mention FCA? No. So where does that come? It comes under clause 1 part 3 of the first schedule. Not being a fellow, acts as a fellow member of the institute. So she is not a fellow member of the institute, but she is acting as a fellow member of the institute. Okay, right. So no, Miss S won't be guilty of misconduct as per the recent decision of the council. A CA in practice can give any details in the visiting card except for vision of the firm. Some option they had to create. Okay, Miss S will be guilty of professional misconduct under 711, clause 7 part 1 of the first schedule. What is clause 7 part 1 first schedule? Advertises his professional attainments or services, or uses designation or expression other than that of CA on professional documents such as letterheads, visiting cards, signboards, unless it be a degree of university established by law in India, recognized by central government, title indicating membership of ICAI, or an institution institution whose membership has been recognized by the central government or the council, and provided that a member in practice may advertise through a write-up subject to the guidelines issued by the council. So this is not advertising of professional attainments. Okay, then will be guilty of professional misconduct as per part 3 of the second schedule. Part 3 second schedule, only one clause over there. What is the one clause over there? Imprisonment for more than 6 months. So this is nothing regarding imprisonment of more than 6 months, right? And yes, DSS will be guilty of professional misconduct as per clause 1 of part 3 of the first schedule. Not being a fellow, acts as a fellow member of the institute. Falsely acts as an FCA. Guilty of professional misconduct under clause 1 part 3 of the first schedule. Okay. Next one. Adi and Associates are the statutory auditors of Prakash Limited for 22-23. While conducting the audit, CS Saurabh, the engagement partner, noticed the following. Payment to various government employees not supported by any document, notices received from various regulatory authorities, payments of various fines and penalties, heavy payments to legal counsels, and unusual cash payments. So out of the 5 points, 4 points I see are regarding the payments over there. Payments to government employees without supporting documents, payments of fines and penalties, heavy payment to legal counsel, unusual cash payments, and the notices received from the regulatory authorities. CS Saurabh should consider the above as indicator of doubt on the accounting system, doubt on non-compliance to laws by Prakash Limited, doubt on the going concern assumption, or doubt on the internal control. Right? So fines and penalties. Obviously, the company probably would have not complied with certain laws and regulations. That is why they have to pay the fines. Right? So it is a doubt of non-compliance to laws by Prakash Limited, SA 250, consideration of laws and regulations in an audit of financial statements. Okay, you have been given, next question, you have been given an assignment of audit of IT department of a PSU. A checklist was handed over to you which contained the many questions such as, are external offsite data backups maintained at a place outside the premises? Are separate username and passwords assigned to the individual users? Are periodical changes of passwords ensured? The type of audit being conducted is likely to be compliance audit, propriety audit, comprehensive audit, and the financial audit. Right? So compliance audit, wherein you check whether the subject matter, whether it is in compliance with the criteria. Right? So whether backups are being maintained, whether separate username passwords are assigned, are periodical changes being made. Propriety, to find out the improper, avoidable, and the wasteful expenditure. Right? Comprehensive audit, the efficiency and effectiveness of the public enterprises. And financial audit, to express an opinion on the true and fair view of the financial statements. Right? So this is not propriety. No looking out for unnecessary expenditure. No checking the efficiency, effectiveness of the public enterprises. No expressing opinion on the true and fair view. Right? So which audit is this? This is the compliance audit. Right? This is the compliance audit. And then coming to question number 9. Sudarshan and Company was one of the joint auditors of Trilok Insurance Company Limited. Mr. Mukesh, one of the engagement team member of the said joint auditor, was examining the expenses included in different accounts. While verifying the expenses incurred in relation to employees, Mr. Mukesh made a list of the same as follows, which he was going to discuss with his senior. Particulars, rupees included in which account? Payment of salaries to employees, 95 lakh included in employee remuneration and welfare benefit account. So payment of salary included in remuneration account seems fine. Right. Reimbursement of premium in respect of employee health cover. So again, it is an expenditure relating to the employee, 15 lakh included in the employee remuneration and the welfare benefit account. Okay. Training and non-training expenses incurred for employees. No, training expenses for employees should be included in the employee remuneration, but non-training expenses, why they would be coming under the employee remuneration account? No. Expenses incurred towards medical treatment of employees not having the health cover. So having health cover and not having health cover, both are covered under the employee remuneration. And incentives paid to employees of the company who have solicited the insurance policy. So you're giving incentives, perquisites to your employees. That has been included in the commission account, right? So it will not come under the commission account. It has to come under the employee remuneration and welfare benefit account. Okay. Whether it can be said that Trilok Insurance Company has properly accounted for the expenses in relation to the employees. No, training and non-training expenses incurred for employees should be bifurcated and shown separately, and expenses incurred towards medical treatment treatment of employees not having the health cover should be included in others account. Okay. No reimbursement of premium in respect of employee health cover should be included in others account, and incentives paid to employees should be included in employee remuneration and welfare benefit account. So second half seems to be okay. First half says it should go to the others, which is not right. No, expenses incurred towards medical treatment of employee not having health cover should be included in the others account, and non-training expenses have to be shown separately. So again it says other accounts, others, and non-training to be shown separately. No, non-training expenses have to be shown separately. So first half is non-training expenses have to be shown separately, and incentives paid to employees should be included in the employee remuneration and the welfare benefit account. So non-training expenses have to be shown separately, and incentives paid to employees should be included in the employee remuneration and the welfare benefit account, right? So D is the correct option. And the last one over there, Paras Bank had an NPA account of Messrs. Su Paras showing a recoverable amount of 35 lakh in the book. It sold the NPA for 37 lakh. Please select as to which of the following option is the correct accounting. Let the amount remain in Su Paras account, credit the excess of 2 lakh to profit on sale of NPA, credit the excess of 2 lakh to provision for loss on sale of NPA, or return the 2 lakh to the party purchasing the NPA. Right? So let the amount remain. No. Credit the excess of 2 lakh to profit. No. Any sale of NPA, any profit is not to be recognized, and excess provision is not to be reversed. That means I need to do the excess provision also. So credit the excess of 2 lakh to provision for loss on sale of the NPA, and return 2 lakh to the party purchasing the NPA. No, if they are ready to purchase for 37, why return the amount? Right? So credit the excess of 2 lakh for purchase provision for loss on sale of the NPAs. Okay, right? So these are the MCQs in the RTP May 23. Yes, going forward, we will see more and more videos regarding the MCQs and other topics for discussion. Right? All the best for your exams.